Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 23rd of September 2016. Let's take a look at these markets. They were pretty much all positive for the week here. All these greens, that column accidentally red but should be green as the bonds bounce back. And the semiconductors continue to add to their awesome performance this year, up close to 26%. So let's go ahead and take a look. Well, by the way, let me just point this out. I replaced the XLF with KBE, which KBE is the S&P banking ETF, whereas the XLF changed its structure this week, and it just seems like a better way to trade with it because of the higher share price. And anyways, I don't really talk about the banks that much, so it doesn't really make a whole lot of difference. Let's take a look at the S&P 500. On the weekly chart, we're still in a primary uptrend, and when we look at this on the bigger picture, it looks like we've had a successful test of this prior resistance. So resistance broken tends to act as support, and that's what we had here this week. So adding more importance to that level, if we're to break it here, before the end of the year, then I think that would be something that would get a lot of attention. We made it through a Federal Reserve meeting, and the market soared after that. So since the Federal Reserve meeting, the volume weighted average price, we're slightly below that. But for the week, we can take a look at the volume weighted average price and see that that is right over here. So tied basically with the 5-day moving average. And the market got a little bit ahead of itself on Wednesday and Thursday, and this pullback was not something that, as I told subscribers, would be unexpected or unwelcome. This is what the level we really want to see hold next week is. Let me just redraw that. It's probably more, something that looks like this: 214.75 to 215 and a quarter-ish would be the level we want to see hold. If it can continue to do that, then it remains innocent till proven guilty on the intermediate term, and then we have the chance of going up and working on this potential level of resistance. We have prior support there that tends to act as resistance. So the first test, it pulled back from, and now we'll see if it begins to start to move higher next week. This will mark an important higher low for the market. So going into next week, I think the S&P is looking good. We did close below that 50-day moving average, but again, it wasn't an unwelcome pullback here today. The NASDAQ closed at all-time highs twice this week and pulled back a little bit here today. So this market, obviously, it's difficult to be bearish a market that's hitting all-time highs and is still above all its key moving averages. It broke an important level of resistance over here, and that resistance is likely to become support on a pullback, and that's about where we have that rising 5-day moving average as well. So, if we're to break below and hold below 117.50, then I would be concerned that maybe it would be lead to a little bit bigger profit taking. But for now, you have to trust what you see and be aware of the potential scenarios, the potential catalysts. Obviously, the Monday night's debate will be something that will be widely watched and will have more effect on certain sectors such as biotech. But right now, we're going to say 117.75-ish is the level we want to see hold, and we're basically looking at this just as a pullback within the intermediate term uptrend unless it breaks below and holds below that level. The Russell 2000 also gained ground this week, and you can see here that we're well above the rising 5-day moving average and the volume weighted average price for the week. We see that as well. So this market made its higher high above a flat to rising 5-day moving average over here and continues to show strength as it closed not yesterday at a new high for the year. Today, obviously, just a little bit of a pullback, and what we would be looking for in here is we're going to say innocent till proven guilty as long as we remain above 123 and a quarter to 123 and a half. On the bigger picture, the weekly time frame, I still think it's possible we could see new all-time highs in the Russell 2000 by the end of the year. We're still three months and a week away from that. The semiconductors are really the definition of a trend once established is more likely to continue than it is to reverse, as again we're up close to 25% in this group this year. And the way way it's been doing it is, it's been finding support at, with these rising moving averages. And once again, we had the shakeout a couple weeks ago. We got back above that 5-day moving average and made the higher high here. This is where the bulls regained control. Going into next week, this group is, maybe a little bit more susceptible to some pullback. I wouldn't really be concerned, though, unless we got below 66 and a quarter to 66 and a half. If we were to get below there and stay below there for more than a half hour or so, then perhaps it leads to a little bit deeper corrective process. But for right now, it's just maybe a little bit cautious because it's below the 5-day moving average, but it does still have an upward slope to it. So you don't want to be betting against this primary uptrend. It's just been too strong, and people who've been doing it and have been losing all year. The biotechs came up to this 300 level that has offered resistance in the past, and you have to ask yourself, when it gets to a place like this, you have to say, where has it come from? Well, it's just come from basically 275-ish up to 300, so uninterrupted. So, do you want to be the person who buys the breakout here? Absolutely not, because where has it come from? It's expended a lot of energy getting here. Where does it have the potential to go before it's likely to encounter a source of supply that might act as resistance? And that's this band of resistance, right? This band of trading right in here that so far looks like it has the potential to act as resistance. However, when we look at a 15-minute chart, we're still showing higher highs and higher lows above a rising 5-day moving average. Now, again, next week we have this debate on Monday, and Hillary is anti-biotech, so that might be the catalyst that does, in fact, prove that this is a place to pull back from. It's certainly, you don't want to be buying up here. I don't think there's any evidence to sell short either. I think the more likely scenario, though, is that what we see in here is that we see a pullback from here that maybe brings it down towards this level. And what that would do, I think, would be to create a, here's our left shoulder. This would be a head. And if we could form a right shoulder that would, refresh the energy for this market and get some profit takers out. Then next week, coming back, maybe let's say Tuesday, Wednesday, or Thursday of next week, getting back up through this $300 level, then you've got a market that is above a 10, 20, 30, and 40-week moving average and making a higher high above that on a weekly chart at that point. And that would be, I think, the catalyst for a potentially, maybe another 10% or so rally, into the end of the year up towards 330-ish or so. I'm not, really into making price projections, but that certainly seems reasonable here as, of course, we've broken the downtrend line that had been in existence for a while, and now we've got this important higher low on the weekly chart, and if we can pull back slightly and then get going, that would be a great scenario for getting long biotechs overall. Apple today had some pullback in this area, and what I was talking about with subscribers was that we were kind of oscillating the last week or so between the volume weighted average price from the low of last month and from this gap higher when the iPhone sales numbers really came out. That between those two volume weighted average prices we were oscillating, and that the buyers would gain control. We were looking to buy it above yesterday's high. Fortunately, we didn't get antsy and buy it ahead of that because the stock came in here today. So I think Apple probably needs to settle down a little bit. Longer term daily time frame, it's right on that rising 10-day moving average, which is above the rising 20 and the rising 50-day moving average, and the 50, 100, and 200-day moving average are all heading higher as well. So the tide seems to be turning for Apple to the upside now. TLT this week did get a bounce. That is, of course, the bonds, and they bounced from this prior level of resistance, which had been a little bit of support over in here as well, and now they're getting up to an area where I think it you have to look at it and say that it's likely to be potential resistance in here, that if some profit takers take advantage of this rally because they didn't get out as it broke down hard over here, this prior support has the potential to act as resistance, especially with a declining 50-day moving average. Some of the trades that we had this week in Alpha Trends were really good, and I'm going to show you some new setups for next week in a moment as well. We got involved in Autodesk as that one was breaking higher right over on this day. We got involved in Beeve today at this point right here. We got involved in CEMP today. The best trade that we had was getting involved in CLCD. We got involved in it a week or so ago. We sold a third of it off as it hit that daily R2 for a 75-cent gain. We sold another third here for $3.30 or so, and then we sold out on a stop of the balance up here with a little less than $10 a share. So, these types of trades are the ones that we're looking for, obviously. We also got involved in GLBL right above this level right here, and that was good for a close to 20% rally as it broke that level. For next week, I think you want to keep an eye on Cerner, CERN. It's been pulling back in here a little bit recently on the daily time frame. When you look at a 30-minute chart, we see a rising 5-day moving average, and what we want to do most likely is purchase it above this level here, and I would say a worst case stop will go below the most recent relevant higher low, which is underneath this level, and it looks like it has the ability to bounce back at least up towards maybe 64.5 or so. So that looks like a good risk reward if it triggers a buy. CSTM is another one that this longer term chart has been a disaster. It's taken its time over the last year. Again, as I like to point out, if they don't scare you out on the way down, they will typically wear you out as it goes sideways. But right now, you see that the stock was up on big volume a couple weeks ago. It's pulled back on lighter volume. And here on this 30-minute chart, we were looking to buy it actually on this day, but it gapped higher, so we did not chase that gap. Now it's pulled back to the rising 5-day moving average, and I think that next week, getting back above this what's been a little bit of a band of resistance here, getting back above that with a stop just underneath this level, looks like CSTM has some room to run. Maybe there's a fundamental story that makes it a good investment. I don't know. I haven't looked at it for that purpose, but if that's your time frame, maybe that's something you want to look at. Similar to shares of ST, this is Sensata Technologies, which had a beautiful stage 2 uptrend over 2013 and 14 and into 15. It underwent distribution and then a stage 4 decline. Now it's under the stage 1 accumulation. Perhaps it's heading for its next bigger uptrend. I don't know that. I haven't looked at the fundamentals at all. But when I look at a daily chart, I see that the stock is looking like it's getting ready to break this little band of resistance in here. And if it can do so, it looks like the type of stock that could support higher prices. So again, if you're a fundamental person, this is the type of stock you want to look at to confirm that your fundamentals match the story of a good chart and perhaps can continue to lead this stock higher. Hope everyone had a good week of trading. The market certainly made it easier this week. So take advantage, obviously, and I'll talk to you next week.